What is the best time frame for forex trading? Hello guys, welcome to the channel. In this video, I will be answering this question I get asked a lot of times using a trade I got in on GBPJPY sometime this week, securing myself a 255 pips on the trade alone. Make sure you stick around till the end of this video if you really want to know how to resolve the mystery behind time frame priority. Let's get right into it then. Starting out with the weekly time frame on GJ. I'd noticed while we had 2 weeks ago, very bullish weekly candlestick. Then we had last week's candle closed as what? Not as bullish as the previous week. We had a very bullish weekly candlestick. And then we had a nice doji, a weekly doji candlestick, signifying the what? The buying pressure was kind of what? Slowing down. And then what did I notice? I noticed this came right into what? A weekly key level. Somewhere around 160, 1500 weekly key level. Yeah, we came into the 160, 1500 weekly key level. And if you look to the left, you can see how, or every time we came into that level, right from March 2022, we had some weekly reactions off of the level. So while we're above the level, you can see what we had the weekly reaction somewhere around here. And then we have lots of what? Reactions. Then what? I'd noticed that what? We came very bullish into the level 2 weeks ago. And then what? There was a kind of what? Slow in the bullish pressure, having to see what? A weekly doji candlestick formed just immediately after what? A very bullish engulfing candlestick. Where did this come right into? This came right into what? The weekly key level, 161.500 psychological level. And then again, also what I'd noticed, we were rejecting not just the weekly key level, we were rejecting also what? The 50 exponential moving average. As you can see what? We had a break, the weekly break below the exponential moving average. Then what? Because we are below the exponential moving average, if you've been following my videos for the longest period of time on how to make use of what? The exponential moving average as trade Confluence. Since we are now below the exponential moving average, every time we retest the exponential moving average, I expected to what? That the exponential moving average will act now as what? A dynamic resistance, because what? Price, all the candlesticks are now below the exponential moving average. So we had a break of the exponential moving average and we had a retest of the exponential moving average, and then we can see what 2 weeks ago, when we came into what to test the exponential moving average, what do we get to see? A rejection. And then we had last week's candlestick closing not just as a doji, but also what rejecting the exponential moving average. So we clearly can see that what we have what a retest of what weekly market structure, and then what in confluence with the fact that we also have what a break and a retest of what weekly EMA, and what this confirms. As soon as I saw what the doji candlestick last week, this confirms what that what this week we're going to expect more of what a bear market from this very level. So I pretty much was looking out for what potential selling opportunities this week. And from when markets opened on Sunday, I had very much was positioning myself to take advantage of every and any sell opportunities I see for the week, as I'd established from the weekly time frame that what we had come into what weekly key level. We had rejected off the weekly key level, also rejected the weekly exponential moving average, and then what expecting to see that bearish move back to the downside. So it was more like what an impulse, and then what your retracement into what the previous weekly key level to continue the further what drop to the downside. So I clearly established that from the weekly time frame, and now this takes me down to what the daily time frame. Coming down to the daily time frame, I noticed very quickly what this is movement we had, the last daily movement we had back into the key level. You can see we had what 1, 2, 3, 4, 5 days of what 5 days of bias pressure, very bullish candlesticks move back. So we test this weekly key level as identified from the weekly time frame. And then what we quickly had what the shifts. What confirms the shift is what the fact that we are having to see what a daily double tops, which as you know is a reversal chart pattern. We had this, and then we had ourselves what? So we had a daily double top, which is a reversal chart pattern. Where is the double top forming? Daily double top is forming just what at the weekly what key level, psychological level 161.500. And then what we are having to see from the daily time frame what a retest of what the daily exponential moving average, just at the very same what the exact same weekly key level. So this increases what the probabilities and confirms my trade bias as identified from the weekly time frame. So having seen the daily double tops, I needed some more confluences to further solidify my selling GJ from anywhere around this very level. And then we get to notice what we quickly add a break of the neckline. quickly at the break of the neckline. It should be somewhere around 161, 550 psychological. Yeah, so we had ourselves, as you can see, when we created when we had created the double tops, we came in and then we had had kind of respected this level. And then eventually we can clearly see we had a very clear daily candlestick break and close below this level being the neckline of the double tops. And if you know your chart pattern very well, you know the best time to get in on the sell trade would be at the break of at the break and then the retest of the neckline. So we had this daily candlestick closing very bearish, breaking the neckline of the daily double tops, and then we had a nice daily retest of the neckline, which we can clearly see from the 4-hourly time frame. Somewhere around here was where we had the perfect entries to go short on this. Taking this down to the 4-hourly time frame. So as you can clearly see, we came right into this level, and then we had this being the most recent swing high. And we're having to clearly see that the break of the neckline has shifted the market structure on the daily time frame from what's temporarily bullish to a bearish market structure. You can clearly see this is where we had the break of the market structure. That's daily candlestick close. This is what confirms the break of the daily double tops. Then, as you can see from the 4-hourly time frame, we had the retest of the neckline of the double top. Also, we can see clearly from the 4-hourly time frame, we had a break below the exponential moving average. And now, since we are below the exponential moving average, every retest of the exponential moving average we're expected to have a bounce off of the exponential moving average, acting as a dynamic resistance also. So you can get to see a lot of confluences were stacking already, all in a bid to solidify our selling GJ from somewhere around this level. So I think we had our entries for short from the 2-hourly time frame. We had entries for short from the 2-hourly time frame. So we had a break and then a retest of the daily neckline, like I had established earlier. And then clearly we are having to see a weekly double tops also. So a 2-hourly double tops also. Sorry about that. So we had a break of the daily neckline, the daily time frame neckline. Then we had first retests, the second retests, giving us a 2-hourly double top. Guys, you can see the confluences are already stacking up. 2-hourly double top, and then also we are having to clearly see a break and a retest of the exponential moving average, as clearly seen from the 2-hour time frame. Since we're below the exponential moving average, we're expecting the exponential moving average to act in this case as a dynamic what? Resistance. And all of these confluences what? Forming right at the very same what? Level. The neckline of what? The daily double tops. Psychological round number 160, 550 or 160, 160, 600. Psychological round number, any which one of them is fine. And then we are having to see what? A 2-hourly double tops. And then what? Our entry confirmation for shorts was confirmed as soon as what? We had the rejection, 2-hourly rejection candlestick off the 160.600 psychological round number, off the daily neckline, and also what? The rejection, a 2-hourly rejection candlestick off the 50 exponential moving average, in this case acting as what? A dynamic resistance. So that was where I had what? My entry confirmations for short. Stop losses were just, I think I had a 35, 36 pip stop loss on this. And then what? I was looking to what? Short price. And so I had my target on this for I had my TP targets for this, the previous daily levels. Or a 1 to 6.92 RR, securing a what? A 200 and actually there was a 254 pips take profit target on this alone. So you can get to see what the confluences and what my thought processes that influenced what my selling day this week, somewhere around what the 160.600 watts psychological level. So yeah, that's it, guys. If I would answer the question, what time frame is the best for forex trading? Simple. There's never just one singular time frame that's best for trading. As cliche as that might sound to believe, fact. There's never just one time frame that's the best. If you really want to get better in your trading skill, as well as get higher probability trade setups from the markets, then you have to learn time frame correlations. I cannot overemphasize this enough. You just have to what? Learn how to what? Have the time frames. Have every one of the different time frames give their different what? Confirmations on why you should what? Get in on the trade. Hence it's called what? Time frame correlations. You can rewatch the video again to see how it all adds up and how having a proper knowledge of time frame correlation as well as top-down analysis helped me make better trade decisions. Do well to subscribe to the channel right away so you never miss out on my video updates. You are the top, guys.